Hello, everybody. My name is Stuart McPhee. Welcome back to the latest Trade Zone presented by 8Cap. Wherever you are listening in the world, it's great to have your company. Thank you very much for joining me. It's my pleasure to be here, and I hope I can share with you some things in the next 30 minutes or so. For those who don't know, when 8Cap run these trade zones, they do a really good job in that all the people that have come before me and now me with this month, they provide us a lot of freedom, a lot of flexibility to do and present things that we want to present. Talk about financial markets that we want to talk about, that we have an interest in, various trading styles and the like. So given what I've done in this industry in the last 20 years, I think it's really important to share with you a little bit about my own, core trading beliefs, what I believe to be true in the market, what makes me a reasonable trader, what makes me successful, but also what I've learned and what I've learned insofar as, helping people. And really what I believe in is, rather than, it's the old story, rather than catching fish for you, I want to teach you how to fish. So what I decided to do this month was, for the first half of the limited time, admittedly, that I have with you for each of these sessions, I did want to share with you some trading education, something you can just grab one piece, put into practice, implement straight away, action, and then we talk about markets for real. So I'm not going to break that mold. I'm going to continue with that with this session. And what I want to talk about today specifically is about the mindset, about trading psychology, about your mental approach to trading. Now, this is a topic that I could quite comfortably, almost without drawing breath, talk about for 3 hours. Clearly, I don't have that amount of time in this session, but what I will do is just talk about some very, very, very few spots or areas about the psychology of trading, and hopefully you can just take one or two things away and go, you know what, Stuart's right, I probably need to work on that, I probably need to fix that, I didn't think about that as an issue, maybe I'll consider that now to help with your trading. Again, I want to teach you how to fish. So I've thrown this slide up plenty of times, even in these sessions, but certainly in the last 20 years, I've thrown up something like this saying it's absolutely critical that you develop a trading plan that's right for you, suits your personality, your trading style, your risk profile. Then you prepare yourself mentally and put yourself in the best position mentally to implement that plan into the market for real, at risk, with the right mindset, with the discipline, with the decisiveness, with the confidence, with the conviction, and all those other things that we talk about in trading. So what I'm going to talk about in this particular session is that little green bit here, the mindset. And when I talk about trading plan, I often say, look, your trading plan, don't be daunted by the idea of putting a plan together. I know people can be daunted. They'll go, yes, I know I need to put a plan together, but I have no idea what to put in it. I don't know what to put in. I don't know how big it should be, how long it should be. Have no idea. Don't be daunted. Remember, at a bare minimum, your trading plan should respond to 3 questions. How do I get in? How much money do I put in? How do I get out? That's it. 2 of those questions relate to the money, managing risk, right? How much do I put in and how do I get out? And the how do I get in relates to clearly the methodology, the strategy we use to identify those high probability, low risk trading opportunities. But it's the glue that keeps it all together is this thing here. And I often refer to this as the 6 inches in between your ears. It's you, your ability to do all this stuff. It all comes down to, when you think about trading, really, it is a psychological endeavor, pure and simple. It's nothing to do with your trading software, little to do with the broker you choose, almost next to nothing to do with the financial products you use to trade. It all comes down to your ability to grab a plan, validate it, prove it, disprove it, get confidence in it, prepare yourself mentally, and then implement that plan with all those things working well for you and the right mindset. I cannot overstate how important it is that you do that and how this is very much a psychological endeavor. People have spoken about that for a long time, but it really just reiterates how much you need to prepare yourself. And, I've said it often, and I mean no insult when I say it, that you are the weakest link. You're the weakest link in this entire thing. So it's so important that you work on yourself. And we'll talk about a few of those things now before I get to the halfway mark of my session, and then we'll go and look at some charts and we'll talk about some of the currency pairs and indices that I have spoken about the last few weeks. Well, Again, I'm not saying anything you should know. You should know all this. I'm not saying anything you've never heard before. But this clearly the mindset, the psychology, your mental approach is the most important ingredient and tool. And the way I look at it is it's your psychology, your mental approach, which determines how well you do other things. So I can say, have a reason to get into trades, have a simple model, calculator, formula to determine how large your trade is going to be, have a way of determining your exit levels, whether they be at a loss or at a profit. Both, they're two different things, right? Either cutting the losses or letting profits run or setting targets or whatever it might be. Have a simple, robust method to determine those exiting at a loss, exiting at a profit. That's all well and good, but it all comes back to you and your ability to implement that, adhere to those rules, do what you know needs to be done. I love this. I say it all the time. Trading is simple, but it's not easy. And I think I got this out of a book about the turtle traders, Curtis Faith, The Way of the Turtle. And there's a difference between simplicity and ease. There's a difference. Simplicity and ease. Trading is simple, but it's not easy for us to do. I'll give you a simple example. When we talk about managing risk, setting stops, cutting your losing trades, simple example is we're going to buy stock at $1 and we determine an initial stop loss at 88 cents, right? So a little bit more than 10% away from our entry point. We're going to get out. Should it fall to 88 cents, that's enough for us to say, stop. This trade is not moving in the direction we had anticipated. Let's do something about it and get out. That simple concept, you could explain to a child, and I'm in a child who's 5 or 6 years of age. That's how simple a concept is. You could explain to a young child, we're going to buy this stock here at $1 and see this price here on this screen. Yeah, if that gets down to 88 cents, we need to do something. And that do something is sell. Are you okay with that 6-year-old child? They'll probably go, yeah, I get it. So those concepts are relatively, keeping positions small is one of my time-tested trading rules. Not taking our entire capital and throwing it into one trade, but breaking it up into small pieces. It's a pretty simple concept. So trading is simple, but it's not easy. And again, it comes back to our mental approach, our mental attitude. Well, I obviously have people from all around the world, which is wonderful to be talking to people wherever you are in the world. So I don't have everyone. I'm from Australia. I live in Melbourne, but there are people I know from all around the world listening into this. So this is, if you didn't know, is what a $100 note looks like in Australia. And how often in a live presentation, I have put this slide up, something like this, or if I'm in Singapore, I'll put up a $100 Singapore note, or US, I'll put a $100 US up and I'll put it up. Or I will literally get out of my wallet and go, here you go, here's a $100 note. There are so many little exercises I can do with this $100 note, which all come back to the psychology of money and our attitude towards money. I'll give you a really simple example right now. I could mention several. I don't have the time to do that, but I'll share with you probably my favorite of all these little experiments with you as my time very quickly goes away. So very quickly, my favorite experiment out of all this is, let's say I have 50 people in the room and I say, hey, here's $100. I'll pull it out. Here's $100. 2 of you are going to be lucky enough to share in this $100. We'll break it up and 2 of you can share it. And I'll pick someone in the front row. There's a woman in the red shirt and a guy in the blue shirt. And I'll say, well done, you two. You now have the opportunity to share this $100. Very simple condition. Number one, the woman in the red shirt gets to determine how this $100 is split up. The man in the blue shirt determines whether the deal goes ahead or not. Is that clear? Woman says how it's split. Guy says yes or no. So I go to the crowd, I go to the audience. I say, what's the most obvious thing that jumps into your mind? What's the most obvious way you would split this $100 note? And a few people, yeah, 50-50. Yeah, you just split it in half. I go, yeah, that makes sense. That's the most obvious way you would split this money up. And I say to the guy in the blue shirt, like, if she said 50-50, would you say, yes, go ahead with the deal? Yeah, of course I would. And everyone else says, yeah, of course you would. But if I gave that woman time to think about this, she could go, I could be a little bit cheeky here. And then she says, well, maybe I'll go 60-40. And I say to the guy, what if she said 60-40, 60 to the woman, 40 to you? He might go for a second, why is she doing that? That's a bit unfair. But you know what? I'll take the deal. At some point If she kept going towards 100 and went to 61.39, 62.38, or 70.30, 80.20, at some point, she would cross a line that we cannot see. She would cross a line at which point, and let's say it's 80-20, for example, and she says, yes, I've made up my mind, I've made a decision, I'm going to go with 80-20. 80 to me, 20 to you, sir. And I say to the gentleman in the blue shirt, so are we going ahead with the deal or not? And he goes, no, no deal. And I say, well, that's interesting. I go to the rest of the crowd. I say, what do you think of that? And I'll just pick out a few random people. Would you go ahead with the deal? And they say, no. How about you? Would you go ahead with the deal? No. What about you? No. Oh, it's interesting. Okay. Well, it seems like, sir, you are not alone. You're not the only person who would have said no to this proposal from the woman, 80-20. But have a think about this just for a second. We had the opportunity, this man had the opportunity to get $20 free $20 that he didn't have 5 minutes ago. He could have just been handed $20 for free, not doing anything, and just said, yes, I'll go ahead with the deal. But he said no. And most of the people in the audience said, yeah, I'm with him. I agree. Why would you say no to a free $20? The reason why he would say no, and most other people, is because we as people, we don't like it when other people get a better deal. So he's saying no because you say, why should she get 80 and only get 20? No, forget it. I'm not going ahead with the deal. He says no to a free $20. How does that make any sense? So he's clouded. His emotions have been clouded with money because someone else is getting a better deal. This is one of my favorite sort of little experiments with just this slide with a $100 note physically in front of the audience. Just one of my favorite things. You know, money plays amazing tricks on our mind. It affects us in ways that most other things don't. I can think of only one other thing that affects our emotions as strongly as money, and that would be relationships. It's the only thing I can think of which is more powerful than money on our emotions. And guess what you're doing when you're trading? Do I need to say this? You're trading with money. And it can really play havoc on us. It really wreak havoc. It can really cause an issue for us if we are not in control of this, if we are not aware of this, if we don't take appropriate steps and preparation to ensure that we are mentally capable and mentally ready to trade well. The reality with trading is you don't see this dollar bill, you don't see this dollar note. You just see numbers in an account. And sometimes I think it's important to remind yourself what you're trading with, and it's real, even though it's just numbers on a screen. I need to move on. My time is escaping me. Just wanted to talk about two attributes. Discipline is something I could talk about for a long time. I'm not going to. I think it's probably the most important development character attribute that traders must develop, that level of self-control. It helps with everything else. How can you be, patient if you don't have that sort of level of self-control? I often think with trading, you're often faced with two decisions. One, the decision is you know what you should be doing, and the second option is what you feel like doing. And often what you feel like doing is not the right decision. It's what you know you should be doing, which what your trading plan says, which is what the time-tested trading rules have said for 500 years. But we often go down the path of what we feel like doing because it makes us feel a bit more comfortable. It's less combative. It's not as awkward, and we just do that, and then we lose money. So that's why I talk about, decisions. Do we make easy decisions, hard decisions? I think a lot of the things you need to do in trading are difficult decisions because they're not what you feel like doing. They're what your trading plan says you should be doing. But over time, you become desensitized. I think over time, in fact, I know, and I hope you do, you become incredibly comfortable making decisions which make others routinely, uncomfortable. But you feel very comfortable doing them because you know that's. And the one thing I'll say about discipline before I move on is we are habitual creatures. We do so many things without even thinking about it. When you get home from work and you walk inside, you probably, the first 5 things you do, you don't even think about it. You just do them. That's called habits. In trading, you must develop good habits. We are habitual creatures. It makes it easier for us to do things because we don't give it any thought, but you must develop good habits. So go and read about how do you develop good habits? How do you turn something into a habit? Do all that, but develop good trading habits. It will make your trading less difficult for you. I love this quote, then I'll move on to one more thing and then we'll go and look at some charts. This quote is from Dr. Van Tharp, a psychologist who has devoted his entire professional life to counseling traders. That's all he's ever done in his professional life. He's the only non-trader interviewed in the Market Wizards book by Jack Schwager. Everyone else is a trader except this gentleman. And I love this saying. I'll read it once and then I'll read it again. Most successful market professionals achieve success by controlling risk. Controlling risk goes against our natural tendency. Risk control requires tremendous internal control. I'll say it again. Most successful market professionals achieve success by controlling risk. However, there's a problem. The problem is controlling risk goes against our natural tendencies, what we want to do. Therefore, risk control requires tremendous internal control and discipline, something I might have mentioned. One more thing before we go and have a look at some charts. And the other thing I wanted to talk about, and I could talk about other attributes, and that's the self-belief, right? The confidence. Where do you get confidence from? Two places, I think. One is competence. If you are competent at something, you will be confident doing it. If you cannot play the piano, you probably won't be very confident doing it because you can't play. If you are very good at playing the piano, you have competence, you'll probably be confident. Competence yields confidence. The other way you get confidence is through results. If you do something over and over again and see performance, see results, that provides you confidence. Think of any sporting analogy, sporting team, a winning, team on a winning streak of won 8 in a row. They'll say, oh, we're just full of confidence, playing with confidence at the moment. Well, why is that? Well, it's because they're winning. Right? The results are there, so they're confident in what they're doing. So confidence is that self-belief, but it's also the belief in the trading plan that you actually put together. Tips, don't listen to them, don't give them, right? Have confidence in what you're doing. And this is my, I guess, a goal for all of you. I want you to all to aspire to be in a position where you could not care less what about anybody else thinks about the market. Couldn't care less. Because you know what you're doing works, no one else actually knows what's going to happen tomorrow in the market, but you have confidence in what you're doing. The risk management rules you have in place to get out of losing trades and keep positions small and the like should also provide you that confidence to actually trade in the first place. And a lot of people obviously have issues with that hesitancy of pulling the trigger and actually putting some trades on. I wish I had the time to go through all this. I won't even pick one. I need to go and look at some charts. All of these things, if time allowed, I would have gone through a few of these just again to prepare your trading mindset to actually get you thinking like a trader. And it does require, I think, a lot of retraining to prepare yourself mentally. The only thing I'll say out of all this, two things I'll say quickly and then I'll go. Bottom right-hand corner, I think almost every decision you make in trading is counterintuitive. Makes no sense. Just doesn't make any sense whatsoever. It's probably the one thing I wish I knew day one. Most of the trading decisions you need to make are counterintuitive. Number two, bottom left, I cannot overstate the importance of simplicity. Keeping it simple. Simple works, makes it easier for you to implement as well. Okay, let's go and look at some things. That's enough. That is beyond my 15 minutes and I apologize for that. Hopefully that's all come through. I just wanted to talk about a few things. The first thing I'll look at is the most actively traded currency pair in the world, the Euro US. We have looked at this probably all of my sessions. I mean, I wouldn't say I trade this the most, but it's certainly in my basket of currencies that I look at, most definitely. And I certainly do enjoy a few trades every now and again in it. So I do look at it often. But one of the things we see at the moment, you can see a few lines, there's a daily chart drawn in, is that if we just zoom out, we notice that, I'll just change it to a weekly chart so I can actually get in the relevance of what I'm trying to show you here, is that right now, bottom right-hand corner, we have seen down at sort of 103.75 or thereabouts, we've seen this massive support level back here, which at the time was a 10+ year low. That's a significant level. Doesn't matter if it's not at a round number of 1 or 105 or 110, it's just the lowest point it's been in years. So sure enough, when it actually returned to somewhere there more, quite recently, just last month, it found support there. People jumped in thinking, years ago now when it actually fell down to that level, just zoom out a bit, years ago when it fell down to that level, when was it, 2016, 6 years ago, when it got down to that level, it didn't go any lower, even though it was trading at say a 10-year low or more, and it actually just had a wonderful run. It really, jumped up and surged up to, well beyond 1.2, 120 and beyond, right? So it's a pretty significant rise over the course of, 18 months or so. There's a lot of upward movement there, very healthy move. So enough people would have seen that and gone, well, I'm going to buy it here now, right now, as it gets down to that level. I'm going to buy it, and sure enough, it gets down to that level and bounces off. But we have more recent levels that are playing a role. And then we've seen the 106 level providing some resistance here, several days here. This is almost 2 weeks worth of hitting that level and falling away. Finally gets back here 2 more days in a row and can't get through, finally breaks up, gets back to this previous level here at 107.50, previous support, now resistance. I mean, this is almost 3 weeks of belting its head up against the ceiling, just can't get up. What's sitting there? Why can't it get any higher? Is it something the ECB said? Did they say something that the euro is not worth 108? No. What's sitting there? What's stopping it? It's called a glut of supply. Yes, we say it's resistance, and it is, but it's caused by a glut of supply, insufficient demand. It's that simple. We just can't get through. There's too much supply, too much downward pressure. Sure enough, it falls back, but it gets back to the same level again and bounces off again. Unfortunately, it's got this 106 level to contend with now, let alone getting to that 107.50 level. So, you know, I think I mentioned this last week. I wouldn't be at all surprised if it rallied back off this 103.75 level, which it has done, but then it's got this 106 level to contend with. And sure enough, it's hit that level and rolled over. Well, let's set up a trade now. Just go through some maths. And this is something a lot of people just don't understand well enough. If we were to say, yes, should I agree with you? I think it's really struggling to get to 106, and let alone there's this dark cloud looming over at 107.50. Even if it was to break through 106, there's this massive cloud there looming. So let's say, Stuart, I think it's going to roll over again and just come down and start and retest this 103.75 level. Well, let's set up a trade. What does that mean? So currently it's at 105.15. So if we were to go short right now, what's the potential target? What's the potential reward in this trade? I don't think you can put an argument forward where it's going to go much lower than 103.75. That's it. That's almost the maximum potential reward we can see in the trade right this second. It is highly likely to get to that level and just not go any lower, right? And find again that glut of demand and push it up again. The maximum potential reward as we see it right now, and we could be completely wrong, but just probability, is from 105.15 or 105.10 down to 103.75. So what's that, 135, 140 pips. That's it, 140 pips. It's a pretty decent move, right? This could take days to do it. I trade off daily charts. Others will flick it down to a 4-hourly chart, see the same thing, or an hourly chart and see the same thing. Don't go too narrow where we lose sight of the key levels. This is the beauty of looking at the daily chart, even if you don't trade them. The daily chart shows you the key levels. Because I would put forward an argument that if this was to roll lower and head down through 105 and continue lower, there's a reasonable chance it'll hit that 103.75 level, or in fact a bit above it, and just really stop and grind to a halt, find a lot of demand kick in and push it back up again. There is a reasonable chance that will happen. Now, if we look at 30-minute charts all the time, you won't see that level. 10-minute chart, 15-minute, you won't see it. That level's not obvious to you. But setting up this trade now, there's a potential 140 pip gain, potential reward. What's the risk in the trade? Well, see, if I went short now, to be because I believe there is a fair bit of pressure being applied down at 106, I'd want to put my stop on the other side of that 106 to provide myself an extra layer of protection. So we're looking somewhere in the order of now, is it currently trading at 105.10, maybe at 106.10, 106.15. In any event, we're looking at a risk of around 100 pips in that trade. Potential reward is 140. The risk is 110. Notice I used potential reward, but I didn't say potential risk. I always look at reward as being potential only. I always look at risk as being certain. Risk is certain, reward's not. That's just me and my mindset and the way I view these things. But in any event, 140 to 100, that's it. Reward to risk of 140 to 100. Is that worth me taking the trade? Is that worth it? It's a reward to risk relationship of pretty close to 1.5 to 1. Let me give you some math. If you consistently get a reward to risk ratio of 1 to 1, you need to have a strike rate of more than 50% to actually make $1. Does that make sense? If you are consistently getting reward to risk of 1 to 1, you need to have a strike rate of at least 50% just to break even. If you have a reward to risk of 2 to 1, you only need to get 34% of your trades being profitable for you to make $1. So the greater reward to risk you can consistently achieve, the less pressure it puts on you so far as a strike rate is concerned and percentage of winning trades. For a lot of people, and for me right this second, this trade's not worth it because I see a 1.4 to 1 reward to risk relationship, and for me, that's not good enough. It just doesn't meet my risk management criterion. That's me. Knock yourself out. You do your own, obviously make your own trading decisions, but that's just the way I look at setting up trades, which even though, and you know, I could be looking at this in 3 days time and sure enough, it's gone down to 103.750, but I was not prepared to take the risk in that trade based on the potential reward. I just want to look at some indices quickly before I finish up. Most of the indices looking like this have had a pretty shocking last, month or two. In the case of the ASX 200, we looked at this a little bit closely 48 hours ago when I went through some of my highs and lows and the advanced decline line, just to get a bit more of a broader look at the index. But this is trading near a 18-month low or thereabouts, and it is got this 7,000 level, which has provided a lot of support. And even if it was to rally, I just really see that 7,000 all of a sudden being that sort of downward pressure, a lot of supply, a lot of people looking at the market and going, oh, it's not going to get back up into that range, which has been for the last 12 months. If I put a lot of these indices on, excuse me, the S&P 500, similar picture, sort of going sideways for a while and then just drifting down towards, in this case, an 18-month low again. US 30 or the Dow Jones, similar picture. Some of the others are German, the CAC, the same. Interestingly enough, I did look at the FTSE and go, well, this is actually a little bit different. It's unusual when you have all the major indices in the world, when we are having significant moves, whether they be multi-year highs or all-time highs, or pretty significant falls, not just daily movement, but pretty significant falls, which we have seen in most indices. It's interesting that the FTSE hasn't followed suit. And we've noticed that, well, I've noticed that, I put these two black lines in here at 7,000 and 76.50, currently trading a little bit above 7,000. And whilst we've seen all those indices moving to sort of 18-month lows and more, and we have seen all those indices have a lot of support over the last 9 to 12 months. The ASX 200 was like around 7,000 as well, but they've actually now broken through, really smashed through those support levels and are now looking, wow, they're way up there, those support levels. Even if we're able to rally up, it's a long way to that support level and get back into that range. We're not seeing that with the FTSE. It's got down to the bottom of the range here, hit that $7,000 level, $7,000 level, and actually found a bit of support there. So very, very different picture. And so the fact that we've seen with the other indices, it can, them fall through those support levels and move to those 18-month lows. I mean, we're not even trading at a 3-month low here with the FTSE. So the point I'm making is, look how much support is actually, how much it's held up for the last 12 months, right at that 7,000 level. So if it was to break through this 7,000 level, I wouldn't think it's the end of the world and it's going to fall to 6.5 or 6,000, because we have seen it just dip its toe a little bit below that 7,000, go on a little excursion below and just see what's down there and then get bought up really, really quickly. I mean, this is 2 days down, 2 days up, and it was like old news. Here, 1 day down, 2 days back up. Very old, and all of a sudden we're just back up above 7,000 again. So if this was to drop through 7,000 on that first day, I wouldn't be going, right, let's short it. It's broken through that support. I've read about support and resistance, and if it breaks through, blah, blah, blah. Well, no, it's shown you that when it has done that, it's been bought up pretty quickly. I'd be a little bit more cautious about something like this breaking through that support level, and I'd want a little bit more, I was going to say confidence, but a little bit more convincing that in fact it has really genuinely, smashed through that or fallen through that 7,000 level and won't go anywhere. And what we're going to see is if it does fall through, it'll get up to the 7,000 and just won't get any higher. And it'll sort of just, again, just sort of bang up its head. Oh, I just can't get back through again. Here, it just went straight back up. Very strong day. Here, 1, 2 really strong days, just got up really quickly. If it fell through and then it rallied up a little, but then stopped and we had a really small green candle and it just couldn't get past that 7,000, then we are starting to believe it might be a different scenario. And we're seeing something a little bit different to what we've seen previously. But I just found that interesting, and I don't look at the FTSE very often at all, but I just found that interesting that, S&P 500, the Dow Jones, European indices as well, and certainly the ASX 200 have all moved to those, more than 12-month lows, and the FTSE's going, what are you guys doing? Like, What's wrong with you? Yes, I've fallen, and I've had a bit of a fall in the last week or two, but it's okay. We're still in that prevailing range, and it's holding on pretty well. Well, that's it. That's it. That's my time. Hopefully, just a little bit more insight into the way I look at markets. Remember, it's my own personal choice, just like it's your money and your own personal choice on how you do this. I hope the bit at the start, just a little bit of education about the psychology and mentally preparing yourself. I hope that was of some value to you and provided you some food for thought. I wish I could talk about it for 3 hours, but I'm not going to bore you tonight with that. So again, just providing a little taste for, the importance of psychology and what you need to do to best prepare yourself for that. And hopefully you found some value in also just looking at the charts as well. Again, thank you very much for 8cap for the opportunity to do this with you. It's been my pleasure to be here. Wherever you are joining around the world, it's been great to have your company. I hope you've enjoyed that, and all the very best with your trading. Look forward to talking to you again soon. Thanks very much.